Michael J. Kramer, take a look here at our S&P 500 chart. We've been watching this one closely, how well it is matching up with previous bear market cycles. Michael says you can see the 2022 S&P 500 bear market cycle is following those of 1937, 2000, and 2008. And based on this, we are due for new lows into October 25th with a short-term bottom around then, give or take a couple of days. Now, who's been talking about this October 25th key date to watch out for the past month or so, right? We've been talking about how that partial solar eclipse is coming in on the 10/25 new moon. New moons, the pattern that we've been seeing is bullish energy around new moons, except when the eclipses come in, that energy overtakes that bullish energy usually, and we've seen recently that these eclipses have brought incredibly bearish energy, massive amounts of volatility, and I want you guys to be prepared. I've been talking about this crash that is prime to be taking place during this time. As far as the exact date, hour, percentage drop, doesn't matter. Doesn't matter. I want you guys to be unemotional as you see these market moves lining up perfectly. I said here 2008, but much worse, right? Everything lining up perfectly here. October 25th is when Michael was saying that the new lows could be coming in based off of the previous fractals and chart. Okay, that's just another data point that we add to that date to watch out for. And in 2008, 1987, and 1929, the panic crash moments concluded during the Feast of Tabernacles. The markets did not bottom out. The pain continued. Please be ready for that. We're not talking about the market bottoming out over the next month or so. We're talking about the market panic crash event, which historically has been about a 35% drop in the stock market over an 8-week period. You guys have seen what has happened to the market over the last couple months here. Perfect timing right here. We have Charlie Bolello laying this down for us. This is the situation at hand, folks. Stocks, bear market down 25%. Bonds, worst year in history. Housing, prices falling for the first time in a decade. We just saw mortgage demand, worst levels in a decade. Economy, 2 straight quarters of negative real GDP growth. Nuclear war, on the table. Fed, hiked rates 3% so far this year and expected to hike another 1.25% before the year end. How about that, folks? How about that for the situation? And we still got the kids saying that the market has bottomed out. Now, I would love for the market to have bottomed out. Well, let me say this actually. I don't want the bottom to be in because we need to clean this crap out of the cryptocurrency space and in the other markets as well. The pain hurts, but we need to go through this. We got to clean up our currency economy, okay? And every single country has a different issue that they're facing. Every single corporation, every single company facing a different issue. Some struggling to make it through. Some have already gone away. You guys are seeing that. You guys are seeing the situation in Main Street. And the jobs numbers that just came out confirmed once again that the Fed is going to continue with this program of doing whatever they can to fight inflation. They created the inflation problem. They created this this bubble that they've inflated over the last 2 decades. And now they're trying to stop it, stop the crash that was inevitable, stop this moment that was inevitable.